Hello and welcome to this Money Control Live. I'm Nandita Khemka and you're watching Morning Trade on Money Control. Well, over the next 30 minutes, we'll be talking about the trade setup, the global developments, stocks and news, as well as the Oscars 2023, as well as India is clearly shining out there. But before we do all that, let's take a look at the top headlines at this hour. Dow sees its worst week since June 2022 after SVB bank's failure sends shockwaves through the banking sector and sparks fear of a contagion. US futures, meanwhile, jump after regulators announced a plan to backstop depositors. Asian markets largely lower, tracking global cues. SGX Nifty is now signaling a flattish start for the Indian market. Close on the heels of Silicon Valley Bank's collapse, crypto-focused lender Signature Bank shuts down. Regulators step in to backstop depositors and offer term funding to prevent a contagion effect. However, they say taxpayers will not have to fund the relief measures. RBI approves the reappointment of IndusInd Bank's Sumant Katpalia as MD and CEO for 2 years, while Tech Mahindra picks former Infosys President Mohit Joshi to take over as the MD and CEO from CP Gurnani in December. Stocks in focus today. The RBI mandated 3-year lock-in period for Yes Bank shareholders ends. Nearly 38% of total stake in the bank will be available to be sold from today. Also in focus are Mahindra CIE and Nazara Tech. Well, let's bring on board Milan Vaishnav now, who's a technical expert for our show today. Good morning, Milan. Good to have you on the show. The setup looks pretty okay right now, given the fact that we managed to shut shop above that 17,400 mark on Friday. And this morning, after US regulators have stepped in, the Dow futures are jumping over 300% in trade. And SGX Nifty has also, shaved off some of those losses and are now flat. So what do you expect the Nifty to do? Do you expect the Nifty to snap the downside that we saw on Friday?
Well, very good morning to all the viewers. Pretty well, yes. See, markets are laying a kind of a short trap for us. And for the week ahead, we need to keep in mind a couple of technical levels, regardless of what is going on in the rest of the world. On the daily, if you look at the daily charts, 17,434 is the 200 DMA, and the Nifty has closed just a notch below that. And somehow it is not giving up the filter of that DMA. And until and unless these critical levels, and one more level, that is 50-week moving average, which is at around 17,350. So what we see on the charts is that 17,350 to 17,450, this 100-point zone is a very important support zone for the Nifty. And until and unless this zone is violated on the downside, we should not be attempting too much of shorts. It's a different thing that even the moves on the upside might remain a bit tentative in nature, but one should not be shorting the market so long as this 100-point zone is not meaningfully violated.
Right, Milan. Milan, hold that thought. Let's also bring on board Aishvarya Dadheech of Ambit Capital to speak about the market setup, the entire banking crisis that is being unfolding in the US and the impact on India. Good morning, Aishvarya. Good to have you on the show. A little bit of good news coming in from the US. Regulators have stepped in and they have, announced a plan to backstop the depositors. Do you think a larger contagion has been stemmed, or, is this a Bear Stearns moment in the making for the US once again?
Good morning. It's so nice to be here. I just believe it's a band-aid for the whole situation, right? That's problem is for real. And what we have witnessed is the big asset liability mismatch, and there will be a lot of banks in US which will be facing this issue going ahead, right? So at one side, when Fed is on a spree to raise interest rate, right, just to combat this stubborn inflation, but on the other side, the fallout impact of it is now very much visible, right? So we believe whatever action that Fed has taken this morning, is just I would say just a balm for the whole problem rather than just taking care of the whole bigger issue. On your point of contagion impact on other, banks, or even say banks like in India, I believe situation is not that grim in India. Indian banks doesn't work like what we have seen in US. And the bigger problem in US is on account of raising interest rate, where we have seen that they have raised rates by 450 bips, which has had this huge MTM losses, which is due to be recognized. That's not the case within India. We should not forget that the current rate of 6.5% repo, Indian banking system is used to that. We have decent CRR, SLR lying with us. We don't do all this fancy MBS and stuff like that. And we are in a very good credit cycle. So I believe personally, Indian banking system is very strong, very well capitalized. We have enough weapon to fight this. Only impact that we'll possibly have is your sentiment negatively impacting the whole scenario. What Fed did today, possibly they will have to now go back and have to really look at their trajectory of interest rate movement going ahead. If they increase rates by 50 bips in the end of this March meet, and possibly trying to support that bank run, I think it's completely two different I would say ways to manage the same problem. So they will not go anywhere if they try to do that. So they have to come out with a very constructive thoughts on this. And I think it's a very, very difficult situation for them.
Right. It is a very difficult situation for the US Fed. But after the jobs data that came out on Friday, the bets for a 50 basis point rate hike have shrinked a bit. Earlier, I think it was a 70% of a 50 basis point rate hike on the 22nd or 23rd of March. But now it has come down to 28% given the fact that wage growth has slowed down. What are your own expectations? Would you be scaling back your expectations of a 50 basis point rate hike, or would you expect the Fed to go ahead and look at that now?
Let me be very honest, till Thursday, I was in a mindset that we were pressing up for 50 bips hike, because I understand that the data till Thursday were not very reinforcing that they will do a 25 bips hike. What we witnessed on Friday, especially both this event, as you said, the wage part and especially that SVB. Now we believe that, possibly, Fed will take a backseat. There is more likelihood of going and doing a 25 bips hike rather than a 50 bips, assessing the situation. It will also depend on this CPI inflation data, which is due today, right? And if that number is somewhere close to 6% or something below than that, possibly they will come out with 25 bips. There is a segment of market, who now believes that possibly they will not do any hike, because we really have to understand this, that the ripple effect of this SVB would be huge. If you look at the various, banks in US and look at their investments, those investments are anywhere between 25% to 40% of their books. And there is almost like 10% to 40%, MTM unrealized losses, which are there, which has not been taken care of. So there could be a 10 to 30, 40% decline in their net worth. And this is something which can, percolate further deep down if Fed continue to increase rate as fast as, Powell has been speaking through his commentary. So in short, 25 bips can't be ruled out. My belief is that 50 bips in right point at this point of juncture looks slightly difficult. I won't rule out a complete, I would say, hiatus for a time being before they take a journey onwards. But, apart from housing, as we are aware, that not much slowdown is witnessed. Right? Even if you look at the new job creation or the unemployment rate and the labor market is still tight relatively. And inflation is still much above the threshold comfort level. So it's going to be very, very difficult. In short, my assessment is that 25 bips is what they should do. 50 looks like far-fetched from here now.
Right. You spoke about Indian banks being well capitalized, and of course there was this entire Adani debt issue playing out in the markets. Now Adanis have been prepaying a lot of debt before maturity, as we all know. How would you go about navigating the Adani group of stocks now? And when it comes to banks, would you say the PSU banking lot is looking better than the private banks, or is it the other way around?
So what is really critical for us to know that the exposure of any specific entities, which is the talk of the town, has very limited exposure to the Indian banking system as a whole, right? So as I mentioned to you earlier, that we are in a very good credit cycle, and the next 3 to 4 quarters looks very, very promising from growth perspective and also from your profitability perspective of the banks. So what we believe is that bank is in a very sweet spot. We don't see any catastrophic, outcome of any of specific issues with some corporates going on, which might have an impact on banks, which is the case we are thinking. But one thing we have to understand is that banking stocks has taken, have been one of the best performing over the last 1.5, 2 years. A lot of this optimism has already been factored into. So from here onwards, money making in banks will be slightly difficult in spite of them reporting better numbers. Even if you see the last quarter, most of the profits to the Nifty has been contributed by banks. And I believe that will be the case going ahead for the next couple of quarters. But from valuation perspective, I believe there's a limited, cushion for them to move ahead. So we have to be very, very selective into private banks, which we believe can create some alpha for investors. PSU have to be very, very selective. The bigger names, I believe in this current scenario, when there is so much of negativity about banks, if banks take a, drawdown on all of these high quality, strong liability franchises, take a beat, possibly that could be a good level to enter into banks in the next 1 year perspective. But easy money making is not the case in banks anymore, what we witnessed 1.5 years back. So last but not the least, we should not forget that raising rates are good for banks, literally. And we are at 6.5%, possibly another worst come could be 25 bips hike by RBI. So any banks which have a very strong liability franchise where the repricing of assets happen faster than the liabilities would possibly see their names growing. And those will be the kind of banks we want to invest our money in.
Right. Aishvarya, you mentioned that money making in banks will be difficult now. So my last question rather to you is that, there has been so much volatility in the markets. Where does one take refuge now? Which sectors would you say, look attractive at this current juncture?
Yeah, so we believe, most likely market will remain very volatile for a couple of months unless we have clarity on the inflation trajectory and how the Fed interest rate outcome looks like. Even back home, we are seeing some sort of moderation in growth. We saw the third quarter GDP number. We are seeing that there are more downgrades and earning cuts happening, though gradually over the last couple of quarters. And obviously, we have to really see how and where the RBI stops on rates. So because, from close to 5% to almost 6.5%, little less than 5% to 6.5% will have an impact on growth for India. So one have to be very, very selective into sectors which will can possibly act defensive at this point of time. Though I mentioned that banks, they would be difficult to make money, but I would advise people to have a decent allocation to well-capitalized and strong liability franchise banks, where we can get a good 10-15% movement in the next 1 year. On a contrast side, we are very positive on ITSS sector. We believe IT in the current juncture is providing a favorable risk reward. So we have been increasing our allocation to IT. Somehow I believe IT is looking to me like what banks were looking in the case of end 2020. No one wants to own them, and there is a lot of negativity about future outlook. We believe that whatever Fed does, one thing is for sure that we are toward the fag end of the interest rate hike, right? Possibly 1 or 2 hikes, whatever things we will come to clarity in the couple of months. And markets always have this habit of discounting things in advance. So I believe IT could come out to be like, this could be a dark horse for the next 1 or 2 years, and it can provide better return compared to others. Even if you see this calendar year, IT has somewhat one of the best performing sector in spite of all the negativity which is associated with that. So apart from banks, IT, I believe capital goods is one sector which looks promising. And we are also a bit on auto and auto ag. We believe that is one sector which possibly is coming out of the blues, and possibly the next 2-3 years looks very promising from that perspective. So whatever one does, it is very important to stay invested into high quality companies, good and clean companies, where earning is somewhat very, very important, because wherever we will see those companies which will fall on earning growth, possibly there will be massive de-rating that we will have see in the next 1.5 years. So stick with businesses with strong balance sheet, strong brand, and most important, where they can see their earning trajectory not being compromised. That is very, very critical at this juncture.
Right. So those are the pockets to look at the current juncture. Well, Aishvarya, thanks a lot for taking out time and putting things into perspective for us. We look forward to having you again on the show sometime. With that, let's go back to Milan and talk about so many stocks that are making news this morning. The stock of the day for me is Mahindra CIE. M&M will be looking to sell 4.6% stake in the counter via block deal. over the last 6 days or so, this Mahindra CIE has lost somewhere around 6.5% or so. And even in today's session, the stock may come under a fair bit of pressure. So what are the kind of levels you'll be watching out for on this one, Milan?
Well, Mahindra CIE is basically sitting on a technical support which exits at around 383 levels. So maybe despite initial jerk, I don't expect the stock to slip much below 370 levels. And in fact, if at all it slips below that level, it will provide a good entry opportunity for the investors from a short to medium term perspective.
All right. The next stock in focus today is Infosys. In fact, we also have a query coming in from Deepshika, and she wants to know if Infosys should be bought on dips in the current market situation. She's currently holding shares at the rate of 1557 rupees a share. So, given the fact that we saw a top-level director exiting the company, and so this is the second top-level exit in Infosys over the last 4-5 months. In light of this, what would you expect the stock to do, and what would you advise Deepshika to do from here?
My view on IT pack is pretty much clear. The IT index itself is right now placed and seen rolling inside the leading quadrant of the relative rotation graph, a tool that we use to see the sector rotation and to find relatively strong sectors and stocks. IT pack as such is quite comfortably placed. And if we narrow down our talk to Infosys, Infosys has a major support in the range of 1450 to 1475 levels, and therefore it would make sense for Shikhar to keep accumulating Infosys with each deep because it's trading very near to the support. The stock may not give us any immediate runaway kind of a rise, but it is certainly set to relatively outperform the broader market. So, well, yes, she must stay invested. And if her liquidity permits, then she can accumulate some more at the lower levels as well.
Right, so that's the call on Infosys. I want to talk about Nazara Tech as well. Two of its step-down subsidiaries have exposure to, Silicon Valley Bank to the tune of 64 crore rupees. And now the stock has, in fact, come very close to its 52-week lows. Do you expect the counter to hit that 52-week low today, given the fact that there is negative news flow around it?
See, hitting the 52-week low today or tomorrow, that would be a myopic way of looking at Nazara. But if we take a little holistic view on the stock remains quite weak on from a technical perspective. It is likely that right now it is in a descending triangle formation, and it's likely to form some fresh lows. It is technically weak, I must say.
Right, Nazara Tech looking technically weak. Also want to get in your thoughts on Yes Bank. The 3-year lock-in mandated by the RBI ends today. The stock is expected to come under pressure. In fact, we also have a query coming in from Harsha on Yes Bank. What kind of level should one be watching out for on this one now?
I would suggest that if you are a short-term player in Yes Bank, and if you see the stock slipping below 16 rupees on a closing basis, then I think you must exit, because 1640 is the 200 DMA. The stock has been clinging on to this level since last many sessions, and any violation will bring in some negative and adverse effect on the stock. So if you see it slipping below 16 and closing below 16 levels, then I think that would be the time to get out of the stock.
Well, so keep in mind the levels that Milan has mentioned on Yes Bank, and you can look to exit that stock around that level. Let's also talk about MRPL. That stock was up somewhere around 8% on Friday, even in a very weak market. And in fact, that counter has been gaining for 5 days on the trot. Now, we have a query from Rajiv coming in, and he wants to know your thoughts on this counter. Do you expect more upside on this one?
I would slightly look at this with a different perspective, that with the kind of the breakout that we saw on Friday, the stock has moved above the 50 and the 100-day moving average, which are in very close vicinity between 55, 25, and 75. So what I would suggest that one can add more of MRPL and keep a very strict stop loss of 55. And those who are holding MRPL can continue to hold on to that stock, but keep trailing their stop losses up to 55 levels, because any slippage Below 55 will mean that there is a loss of momentum that has spurted, that has caused this kind of a move. So 50, while watching 55 levels as one of the important levels, one can stay invested in MRPL, and if the momentum continues, then maybe 61 to 63 levels is something that we can expect.
Right. Another counter that is expected to see a block deal in today's session is SONA BLW. We have a query coming in from Jiffin, and he wants to know your thoughts on this stock for the long term. Would you advise investors to buy into this one now?
We are talking about
SONA BLW.
Well, I'm sorry, I'm not following that stock.
All right, no problem. The next stock let's talk about is Vedanta. Now, we know that a lot of brokerages have come out and said that, the underperformance in the Indian metal stocks actually put them on a pedestal for more gains in the future, and maybe it's time to buy into some of these metal counters. So we have a query on Vedanta coming in from Subir Mundal. Would you also advise investors to look at some of these counters like Tata Steel and Vedanta now?
See, there will be a double-edged answer to this. Vedanta, in particular, was under some news recently, and because of that, it might continue to slightly, relatively underperform the rest of the peers or metal pack. But one thing I would like to point out that a dollar index had seen some significant weakness on Friday, and that is going to get reflected today in metals and commodity stocks. So, well, yes, along with Vedanta, which might be little, find it difficult to outperform the peers, but Vedanta, Hindalco, and Tata Steel are the metal counters, especially Tata Steel and Hindalco, that we'll need to keep an eye on. Vedanta, I would have a very cautious approach on Vedanta, but apart from that, metals per se are likely to do good today.
All right, metals poised to do well, but Vedanta not among his favorites. Milan, before I let you go, do let us know about your stock recommendations for this morning.
I have two stock recommendations today. One would be Mahindra Resource. I'll just give me a moment. Mahindra Resource, basically, it's under a Bollinger Band squeeze, and we are expecting a good move on it in short time. So one can enter a Mahindra CIE, Mahindra Hotels and Resort (MHRIL) above 282 levels with the target of 300, and while maintaining a stop loss of 268 on the stock, we can expect an upside target of around 300 to 305. And the other stock that I'm looking at would be Coal India. I would be looking at buying Coal India above 225 with the target of 242 and a stop loss of close below 219.
Right, Milan. Well, those are the stock recommendations coming in from Milan for this morning. Thanks a lot for taking out time and joining us this morning. But I know we are completely timed out on the show, but I'm not going to wrap the show without talking about the Oscars, because India has completely been shining in Oscars 2023. So RRR's Natu Natu has won the Academy Award for the Best Original Song, and Kiravani took the stage to accept the honor. In fact, even another Indian entry, that's Elephant Whisperers, directed by Kartiki Gonsalves, bagged the Oscar for the Best Documentary Short Subject, and the Indian documentary All That Breathes had also bagged a nomination, but it failed to walk away with the win. And in another moment of pride for India, actor Deepika Padukone is among the presenters at the prestigious awards this year. Well, with that, we are completely timed out on this edition of Morning Trade, but don't go anywhere, because coming up next is Opening Bell.